Hello and welcome. In this video, we'll discuss about difference between tax planning, tax avoidance, and tax evasion. We'll also see which one is legal and which is illegal. And at the end, we'll discuss some MCQs to clarify your concept. Let's start with the first term, tax planning. It is a legal way of arranging financial activities to minimize tax liabilities, and it is within the framework of the law. So it is legal as per Income Tax Act 1961. And what is the objective? The main objective is to take full advantage of deductions, exemptions, and rebate provided by the law. So if we plan tax in advance, we can full utilize the benefit of tax exemption, tax deduction, and discount, that is rebate, provided under the law. For example, investing in public provident fund, life insurance, national pension plan, or any uh, other investment provided under Section 80C, or claiming HRA exemptions, etc. So it is legal and ethical. But one point to note here is in the current year, when I'm recording, that is 2025 year, the government has already declared new regime compulsory for everyone. So under new regime, there is no deduction applicable. That is section 80C, 80D, 80U, all these are not no more valid. So because the slab-rate is already increased, so all these exemptions and deductions are removed. So these examples you can refer for uh, your knowledge purpose only. Earlier, these investment options were available for deduction, and people used to plan tax in advance so that the liability will be reduced. What are the methods of tax planning? First, short-term planning. It is used at the end of the year for that financial year only. So if any person falls under the tax slab, so he tries to invest the fund in some uh, tax deductible investment so that under the section provided under the law, the tax liability will be reduced. So, for example, investing in tax saving fixed deposit or ELSS scheme of mutual fund under section 80C to reduce tax liability. Next is long term planning. So long term planning is for retirement benefit or child education benefit. So they invest into NPS or public provident fund like this, where there is long term investment and the benefits can be received for longer period of time. So short term tax planning, the investment is done at the end of financial year, and for long term tax planning, the investment is done throughout the year for many years. Okay, similarly, for taking housing loan for interest deduction benefit, so housing loan, if we take house loan, then tax the principal amount and interest on home loan. Both are both were tax deductible. Then permissive tax planning. Planning done according to provision of the tax law that provides exemption, deduction, and incentives, claiming ETC and ATD. ATD for medical insurance. Using exemptions like agricultural income, you must have heard about the celebrities providing declaring agricultural income. So you can go through the concept is very interesting. And last is purposive or progressive tax planning, where tax planning is done for not just saving the funds, but for longer period of time, thinking about wealth creation, retirement benefit, and business expansion, etc. So these are the methods of tax planning. These methods are just commonly classified. It is not necessary or provided somewhere. Next, tax avoidance. Tax avoidance is a practice of using loopholes in the system or technicalities or gray areas in the tax law to reduce tax liability. And though it is not illegal, yes, tax avoidance is also not illegal because the loopholes are provided in the tax system. So, for example, you must have heard about Panama Papers or investment in real estates in Mauritius. So, these are tax avoidance loopholes. The main objective is to exploit shortcoming in the law to one's benefit. For example, shifting income to another country with a lower tax rate, that is transfer pricing or tax haven countries. Or next, structuring transaction to show capital gain as revenue gain, as business income, if it reduces the tax burden. Okay, technically it is legal, but against the spirit of law. So tax planning is legal and ethical, but tax avoidance is legal but unethical. Next, tax evasion. Evasion means not paying tax at all. So tax evasion is illegal practice of deliberately misrepresenting or concealing, hiding, or falsifying information to reduce tax liability. The main objective is to escape tax liability unlawfully, means tax evasion is illegal. And what are the examples of tax evasion? Not disclosing income at all, or inflating expenses, increasing inflation expenses, showing more expenses, so to show less profit, and creating fake invoices. Some people used to do this. Hiding assets abroad. It is illegal also and punishable. Penalties, fines, and imprisonment is there. So, what is the difference between tax planning, tax avoidance, and tax evasion? Tax planning is legal and ethical. Tax avoidance is legal but unethical. And tax evasion is illegal. Nature. Tax planning is done with proper use of tax law. Tax avoidance is done through exploiting loopholes, and tax evasion is done through concealment of information and fraudulent information. Next, ethical aspect. Tax planning is ethical, tax avoidance is unethical, and tax evasion is more than unethical, that is criminal offense. Objective. Tax planning is done to save tax lawfully. Tax avoidance is done to reduce tax with some loopholes, and tax evasion is done to escape from tax liability. What are the examples? Tax planning can be done by investing in provident fund. Tax avoidance is done by shifting the profit to tax haven countries such as Mauritius, and tax evasion means not disclosing income at all. So these are the difference between tax evasion, tax planning, and tax avoidance. Let's start some MCQs. First, which type of tax planning is carried out at the end of financial year? It is short-term tax planning. Option B is correct answer. Next, which of these is illegal and punishable under the law? So it is tax evasion. Next, the practice of arranging financial affairs to reduce tax liability within the framework of law is tax planning. Next, tax avoidance is completely legal but against the spirit of law. Correct. B is correct answer. And last, which of the following statements is true about tax avoidance? It is punishable under the law. No. Tax evasion is punishable. B. It involves misrepresentation of facts. No. But C is correct answer. Tax avoidance. It uses loopholes in tax law to reduce liability. Option C is correct answer. Here we have completed topic and distinguished between tax planning, tax avoidance, and tax evasion. Happy learning. Bye.